What's up, guys? Today I'm going to talk to you guys about daily bias and how to find your sell side and buy side liquidity every single day so then you can get your daily bias right every single day. So right here, for an example, I'm just going to start out for, how you find your example for daily bias. So right here, market opens, market opened at 8:30. So I'm going to restart this. So this is pre-market still. So how I got this? We have an hourly high right here, hourly high right here, another hourly high right here. We have an hourly low right here, and then we have an hourly fair value gap right here, which is, I'll just draw out the fair value gap, but we have an hourly fair value gap right there. And so right now, all you're doing when market opens is whichever one gets hit first. So say lower gets hit first, you're a buy that day. Higher gets hit first, you're a sell. So we come in, market opens, bam, sell side gets hit. So now we're okay. Now we're looking for shorts. So looking for shorts. What do we have? Right here, we can just go off of the 5-minute. What do we have right here? We have a break of structure. It's a big candle. Looking for a little bit of a retest. Or are we getting off of the break of structure? It's a terrible stop loss. And you just go to the sell side liquidity or the buy side liquidity. And bam, gets hit. Obviously, this is a terrible trade, but I'm going to show you guys how you get this daily bias and what to do with it. So now that we're on the hourly time frame, I'm just going to show you guys some examples. So first off, I'm going to start out with doing this. So buy side liquidity. And sell side liquidity. So all these two is look for an hourly slash hourly slash 4-hour high or low. Nope. For buy side, you look for a low. 4-hour low. Look for an hourly. And then sell side, look for an hourly slash 4-hour high. So, say it hits sell side, say it hits buy side, sorry, you're a buy. So you're going long that day. You're a sell side, you're going short that day. Okay, so going right here. So say market, I drew these out. Anyways, market goes down, takes out this liquidity, it's going to be buy side, and then it'll continue going up. So then when market goes up, and say it doesn't take out this, takes out this one, goes down, that's sell side. So that's all it is. And if this liquidity gets used, and then it goes down to this one, because this one hasn't been touched yet, this liquidity has already been hit, but then there's a new liquidity right here, and that'll keep going up. So whenever sell side or buy side gets hit, it can never be reused. So here, you guys can take a picture of that or do whatever you want. But we go to the hourly time frame. Let's go when market's open. So yeah, we'll go to Wednesday. So right here we have an hourly. And then say we have an hourly right here. I'm just going to get all of them going. So then, okay, we go down to the 5-minute. So this is for Wednesday, the 13th. So market opens right here. Market opens right at this vertical line. So right here, sell side already got taken out pre-market. So then we can get rid of that. So now all we have for buy side and sell side is we have this hourly high and this hourly low and this other hourly low. So then all you're going to do is wait for one of them to get hit, and then you're just going to take a trade off of it. So right here, go down, bam, gets hit at 9:05. So 9:05 comes, and we're like, okay, buy side gets hit. So now we're going long for the day. So then we can go down to the 1 minute. We can go to the 1 minute. Now we just need a fair value gap to get filled or whatever you guys want for a confluence or a trade. So right here, you can go, you could have went long right here, broke structure, and then put stops, say we put stops below here, and then I have no idea if this trade works out or not, by the way, but we put highs right there because that's where the buy side or sell side liquidity is. Let's see if this works. I honestly have no idea. Oh, it did work. Oh, maybe not. So right here, it's still testing that area. So then we're like, okay, still going. It's a long trade. Let's see if it hits buy side. This is a really long trade. Holy crap. We're still in the trade. We're still not going to hit it. Oh my goodness. This is going to be an all day kind of thing. It didn't even hit it. So anyways, it didn't hit it. Maybe. Let's see why. This would have been, okay. So yeah, so we ended up getting stopped out. Anyways, so this trade wouldn't have worked if you were aiming for this buy side or sell side liquidity, sorry. But after this trade happened, so at oh my goodness. All right, so at 9 o'clock, 9 o'clock, so at 9:17 we would have gotten into the trade, correct? Here's where we would have went wrong. If we were aiming for this sell side, look what happens. It created a new high right here, so then we would have been targeting this. So then we're like, okay. Then we would have been like, we need to aim for this. This would be TP2. So that's when we would get into the trade. And then right here, it would have gotten hit. I misdid the first one, but there's an hourly high right here. So then this would have been our TP2. But I did not take this trade. I don't think so, at least. Yeah, I did not take this trade. I got off the markets. But yeah. This was a trade for Wednesday. And look at that. You just go off a buy side and then just go right to sell side. And sell side can always change. So like I literally just showed you an example where Sell side liquidity was right here, but then it created a new hourly high. So then sell side turned to right here. So yeah, it's really just that simple. And all it is just highs and lows. So in the first video, I went over highs and lows. So you just go over a high and a low on the hourly time frame, and then you just target that, or one of them gets hit, say buy side gets hit like right here. You target sell side after that. And if you're doing it correctly and everything's right, then that would have been your trade. So yeah, that's all I got. And then we can go do this on NASDAQ as well. So on NASDAQ, because I trade both NASDAQ, I've been trading NASDAQ a lot more recently. But market opens. This is the same day, by the way, on Wednesday. Market opens. What do we have? We have this hourly, this. We have this right here. We have this. Oh, son, okay, we're waiting for one of them to get hit. Bam. Sell side gets hit, or buy side, excuse me. Buy side gets hit, so now we're aiming for this. So now we're like, okay. What are we getting? We have this fair value gap again. Maybe it gets broken right here. So it got broken. So let's just try to find a trade in here. Okay. So right here, what do we have? We have this, gets swept. What does it turn into? It turns into an order block. Went over order blocks in the video before this. So what happens? It turns into this order block. We have this right here. Take a trade. Stops right here. And then we have this sell side liquidity right here. So then we go up here. This is our TP1. Huge TP1. But let's see what happens. Almost got stopped out right here. But we didn't get stopped out because our trade was the right trade to take, at least as of right now. And then let's see if it gets hit. Bam, right there. Take profit 1 gets hit. Take profit 2 gets hit. See if take profit 3 gets hit. Boom, boom, boom. But yeah, that would have been our trade. TP3 did not get hit before market closed, but as you can see, what do we have? We have a 1.89 risk to reward and then a 2.01 just from buy side and sell side. So what happened here? Going over this again. Sell side gets hit, or buy side, excuse me. I keep saying sell side. Buy side gets hit. What does it have to go to? It has to go to buy side. But how is price going to get there? Price is going to get there by getting into one of your confluences. So what happens? We have a fair value gap right here. We also have an order block from this. So what happens? It goes into the fair value gap, shoots out of it. We get in right here. And then what happens? Keeps going, keeps going. bam, it gets hit. It was that simple. And yeah, there's really nothing else to it besides it's just sell side, buy side. And yeah. So all it is just marking out the highs. That's all it is. Marking out the lows for sell side or buy side. Sell side, sell side, sell side, sell side. One of them gets hit, goes into it, goes up. It's that simple for you guys. I'm just gonna wrap this up. I think it's gonna be a shorter video. I can't really tell right now. But yeah, that's all I got. Thank you guys for watching. I hope you guys enjoyed, and I'll catch you in the next videos.